How are we doing today? Some places around the country, it's beautiful, sunshiny, and other places, it's a little bit rainy. Hey, stay dry and stay warm for all those folks. How's everybody doing today? Welcome to Wednesday, June 18th, 2022. Sorry, I'm trying to multitask here, and that's my problem, I guess. Hey, members, don't forget today at noon we kick off our member e-learning. I believe Doug with Right Way Option kicks it off, then John, and then I pick up the back end. Starting at noon, we're approximately 1 hour each. So love to have all members there. It will be in the members combo room. That's where we all get together, all divisions of Hit Run Candlesticks, and we'll do our e-learning, our education. What is the topic? Good grief. I can't remember now. Sectors, that's it. We'll be talking about sectors, Val, sectors. Another thing, please be reminded that tomorrow is a holiday. And I think that's very, very important as you trade this market. Also, it would appear that the housing stats this morning and jobless claims are a bit benign. It doesn't look like they're doing anything with the market. Now, at 2 p.m. today, we've got FOMC announcement and then the press conference at 2:30. That could be a little different, but like I say, right now, it looks like nothing happening. It's still just a boring day like it's been past several days. Hey, look, if you're not doing anything on Tuesday, June 24th, all day long, starting right now, if you wanted to be here in the live trading room, we'll open it up for you and we'll have an open house here at Hit and Run Candlesticks. So I absolutely invite everybody to come over. Please do check out our social media, Facebook, YouTube, X, and register for this if you would. I sure would appreciate it. That way you'll get information about the login and everything. Okay, so make sure you sign up. Love to have you there. And also I'm kicking around, excuse me, I'm kicking around giving some things away. So anyway, right now we'll keep it a surprise. Okay, so register for the open house. All righty, let's get this kicked off. Let me get rid of this. There we go. Okay, we're up and running. Hey, good morning, Vernon. Thank you very much for being there. Appreciate it. Good morning, Ed, Val, Fred, Julie, good morning. Tammy, good morning. Tommy, Bill, Donna, good morning. Joe, roasted. Great quote, by the way, Joe. Great quote. Mike, Chip, Gold, Alan, Sonny. Good morning. Good morning. Sonny's always the first person here. Thank you, Sonny. You're the one that always kicks us off in the morning. Okay. So, as I look at the market here, move that over. As I look at the market here, it sure looks, overall, the trend is still bullish. You can see the green dots right here. We're still bullish. Price is still above that. T-line still above those dots. Price is sort of questionable, right? Price kind of, yesterday we closed below. Looks like we're trying to move up above today, but the true story will be told at the close today. Overall, if I just look at these candles here, we're just moving sideways. And this is what we thought. We talked about this. This week is likely to be, a nothing burger, nothing burger. And we've got too much going on. You've got a day off Thursday. Nobody's going to want to work Friday. We've got the Fed speak today. Fed announcement, and just a boring week so far. Now, next week might be a little bit different. I'm kind of expecting next week a little bit different. All traders, investors, all taking a rest here. So next week they might be full of piss and vinegar and kind of move this market one way or another. If we take a look at T2123, for those that have TC2000, I love this indicator. And the indicators, it's you can see it's pointing to some, downside bearish move here. And I will assume that the whole market is at least, the market doesn't have to necessarily go down. But it might not be good trading. So when price is below the T-line's below the trend indicator here, that red dots, that gives me some real concern on the market. Really a lot of concern, actually. And then to boot, we've got VXX moving up here. So this is just not a good sign. Now, it seems like the Qs, there's been some tech stocks that's kind of holding us up, and that is that's the little bugaboo right there. This indicator works great, but if tech starts to move, it can hold the market up. Market may not be great, but it can certainly hold it up. If we take a look at SMH, it's still climbing here, and so we've got some tech that's kind of holding us up. If we look at the diamonds, well, the diamonds are just flat sick. I mean, that is what I would call an ugly chart pattern right there, where we've popped up here, we've gapped down, and we're putting in a little bear flag. So we need to keep an eye on that. Yeah, we'll keep an eye on that. Anyway, so right now, I still think we need to break out of 602 here before the bulls could get going. And any weakness to the downside, I'll be looking at the trend indicator, broad numbers, the trend indicator to get tagged. And then, we could sneak down to 593, 590 down here. And, well, we could even go lower, I guess, but we'll talk about that if we break this area right here. But overall, really, the market is just moving sideways. That's all it's doing. I think the bulls are pretty darn resilient. Bears can't seem to get any traction. While they continue to try, all it creates is this slow trading here. So trade cautiously, okay? I mean, this week is just darn near over and nothing going on. So kind of hard to get too involved. Okay. So I posted, I probably should think about things before I post them sometimes. Try to think them through, but it does offer people asking questions. So I posted on social media, who thinks that Reddit is going to go to 155? I think I wrote 155, basically this 50% retracement right here. And well, I guess not I guess. In fact, I neglected to put like in what kind of time frame, because that's what a lot of people are asking. So before it fails, I mean, before we start putting in a downtrend, so maybe something below the 50 period moving average. So like personally, I think we're going to go to that 155 area before we go below the 50 period moving average. Right now, I'm watching it like a hawk waiting for an entry. So I want an entry in here, and then we'll see if it can run to that 155. So I'll be updating the post on social media, Facebook, X. Sorry, YouTube, I can't just videos over there, but X and Facebook, I'll be talking about this more right in here. So like I said, I mean, here's the trend starting to move up. So for those that are participating in our little game here with Reddit and social media, before it goes below the 50 period moving average. As it starts moving up, I'll adjust that up a little bit. But we can keep track of it over there, Facebook and X, if you want. Let's see, there was something else I was thinking about. Well, I'll think about it in a minute. Here, let's bring up a couple of stocks here. Whoops. There it is, I think. Take a look at QBT, QUBT. That's still working up here. And I still have targets up here around 24.30 and then 26. We'll call that 27 up there. But that's still working. Now, when I look at a stock like this and we talk about it, we say, well, that's still working. Look, don't do anything foolish, okay? I mean, don't do anything foolish. Don't just assume that it's just going to march. That's not what happens, okay? Notice the pullbacks here. Notice you have pullbacks, all right? I mean, that's what trading is. So you're going to have those. You're going to have those. This is one of the things that I get. I really get yelled at by a lot of people. They'll send me private messages and, "No, you said, well, my God, you bonehead. I mean, do you think you're not going to have pullbacks?" So please, think about what trading really is about. So anyway, I think that moves up there. HIMS. HIMS is insanely popular by an awful lot of people. There's chatter about HIMS everywhere. And for rightly so, rightly so. Here you've got one heck of a cup and a very nice handle there. So rightly so. I think HIMS goes higher. And, we're going to put a line right here at this very, very tippy top here. And then we'll come over here to that high and put a line right there. And I think I want to put a line right there as well. So it's really simple. Targets are not tough. I've got some grandkids old enough I could teach them where tops are and bottoms are, and they could draw straight lines there. So it's not tough. So here's what I'm going to look at. Make that blue. Right in this area here is an entry area and stop area. Okay, and we're looking for price to move up here. It's real simple. So we're looking for price to go boom, boom. Oh, maybe hit that target, hit that other target, and then up there and hit that other target. Please do keep in mind that you can be as bullish as you want, but if that market goes against everything, then the bullish activities need to be put on hold a little bit until the market turns back to that bullish side. So that's very important. So HIMS is there. AMD. AMD. I see AMD going to 150. This might be another one that we play a game with on social media. Keeping in mind that we're still going to have pullbacks no matter what, and then up moves like this till we get to that I don't know, what is that, 152 area right there. So AMD is still on the bullish side. Again, make sure the market is bullish. Okay, so if the market turns bearish, you're likely to turn down a little bit. So hey, good morning. Got some people. Oh, Hydro, good morning there. Egg, good morning over there. Stephen, good morning, everybody. Coach, hey, Coach, good morning. Wow, you guys fill up fast. Wow, okay. All right, let's take a look. I see that Sonny, you're looking at some Boeing. So I don't know whether you're looking at Boeing bullishly or bearishly, but right now Boeing looks to me like it's still moving down. Nothing, here we are up. Notice the trend. There's the trend, right? Green dots. Now look at the trend. The trend will stay the trend. The trend will stay the current trend till it's no longer the current trend. I wish I could. That's what I want on my gravestone, okay? The trend is the trend until it's no longer the trend. It's really simple. So when is this a buy? Well, when it turns those red dots green. Pretty doggone simple. So right now, if we're looking at a chart pattern, what we've got is a bear flag. So we've got this top up here. Here we're down, and there's your bear flag. Still looking for it to move down until it changes. And we will know that through price action. And we see the price action through candlesticks. So again, when we see buyers step in, now we can look to trade this. Let's look at two different ways to trade. All right. One way is with candlesticks. The other way is just pick your bottom, say, you know what, I think Boeing is going to pop up from right here. Boom. All right. I mean, I wish everybody in the world luck on that one. But I don't think it's going to work out for you in the long term. I truly believe your trading career will be cut short, very short, in fact, because then here's what you get into then. So, let's just say buying Boeing because I think that's the bottom right here. So it continues to go down because nowhere here suggests it's actually a bottom. It keeps moving down. It gives you this little ink of hope, and then it just moves down more. And then what we do is we come in here. Oh, let's buy more because we're going to average down, right? Bad idea. And then it just keeps on moving. I mean, it just turns into a nightmare for you. So if you're following candlesticks, candlestick rules are very, very simple. Wait for the candlestick. Now, could be a bullish engulf, could be a hammer, could be a couple of candles. And then what we're going to do is we're going to trade on positive trading of that candlestick. Bottom line, you're going to give that up to make that, and then you're going to profit into strength. Absolutely, I think, the way to do it. Now, it doesn't mean it's a right way, but you'll be a trader a lot longer than trying to pick bottoms. Anyway, so there's two possible ways to look at it. But right now, I would have to say that 50-period moving average is going to get tagged until price says different. And if we go over here to the left and we look at price action, we could actually get a little lower because there is where a little support might happen. Buyers might come back in around 86.05. That is possible right there. But we don't know that until we see that candlestick or candlesticks. We see the visual that says, yep, there's buyers picking that up. Anyway, thanks. That was awfully long. Thank you, Sonny. Appreciate it. Hey, ask good morning. You're looking at some SYY. Not a bad chart. Whoops, sorry about that. But have to keep my phone on loud when the wife's out of town. I try to do that in case she calls me. So we've got this nice little, I like that. Here we've got this nice little trend here. Here you see we've broken out. So I think what we're looking at to be long here, I think I would have to look at, well, whoops, let's make that green, huh? I would have to look at those buyers coming in. So, I mean, and that's the way I try to do things. It's not that it's right. It's not that it's right, but I don't know. 36 years might suggest that there's an edge there, maybe. I don't know. So, I'm willing to give up any kind of monies through here that you might make, because it could pop up today. And then, trade that candle because it breaks out. And then the swing, and I guarantee it's going to pull back to give another chance. I mean, there's not supposed to guarantee things in trading, but this is one thing I can guarantee. You're going to get another chance. And then, do something like that. Anyway, I like that. Let's flag that one right there. A little bit wicky, but you get the breakout. It kind of stops that. Take a look at the weekly chart. You've got the 200 period moving average that has to get over. Also, too, let me mention this. I don't normally talk about this too much. Not even in the trading room do I talk about this too much. Yesterday, we had one of our members do a class on the cloud, and I just looked at my other screen over here, and I can see that this is also above the cloud here, just breaking out. So look at that. So yeah, let's flag that, keep on the list. Okay. I think that looks pretty good. All right, let me come over here. Let's look at Dell. Dell, nice chart on Dell. That's a beaut. Flag that one right away before I forget. So let's do this here on Dell. Look at that consolidation right there. Let's change that. There we go. That consolidation right there. This is a pop out of the box, by the way. Pop out of the box is one of our flagship strategies where price moves up and then it consolidates very tight in a nice tight sideways consolidation area. Inside that box is buyable. The breakout is buyable. And then we're looking for profits on the way up. We want to take profits into strength. And now I have to get rid of that to do this. And I think we better do this actually. Yeah, I'm going to do that right there. And then we'll put a target up here. And then one of my favorites is to put that up there. Look at that. Bingo right there. Right there is the 50% retracement. So that would be the first major target for me right here. Once we move on top of that area, that becomes some very good support. And then I see this 147 up here. That's a nice chart, Dell. Nice setup. SBS. Take a look at SBS. A trend will stay a trend until it's no longer a trend. That's what you got in SBS. Here's some consolidation. We're trying to break out, and you're simply looking for that follow through. So bullish. Let's see. Did I miss anything? Bart. I think yesterday you mentioned dog. Are you still looking at it? Well, it depends what the market does here. DOG. It really kind of depends what the market does. I'm on the weekly. Doggone it. It depends what the market does. But right now, I think we're setting up pretty good. Looks like we have a nice little double bottom right there. And we have a bull kicker pop the upside. And now we have this, what I would call pretty tight consolidation right there. So right now, I would look at that 50-period moving average as being targeted up there as a target. And I think this one would be a great candidate for that right there. So there's the 50-period moving average. There's the next target up around 28, 29, 28, 28. And then 28.30 up here is what I would look at on that. I know that several people bought SQQQ yesterday, and daily wise, it hasn't popped up turning the trend indicator yet, but hourly, I think it has. Yeah, see, hourly, it's up there. But this is where I really want to step up here and say that, cash is a position, and I just don't believe this is the best week to be trading. Now, I'm sure somebody can step up here and say, man, I've made hundreds and thousands of dollars. I'm sure somebody has done that. But by and large, most people have not. And that's because the market is just slow, boring, and you end up forcing a trade. Okay, so keep that in mind. Let's see. Hey, Carl, did you say you have been trading for 36 years? You must have been pretty young when you started. Yeah, I was in my 30s. Let's see. My son is, I was in my 30s. Yeah, I'm 60, almost 68. But I was in my 30s, yes, when I started. I worked for a living the first few years, at another job. Living in Alaska at the time, time-wise, the time difference was perfect for a trader. Yeah, if anybody wants to start out trading, I think Alaska is the perfect place to do it. Hawaii would be good. And the reason is I had a job that I didn't have to go into an office, didn't have to punch a clock or anything like that. So I would get up early in the morning and I could learn how to trade and everything all day till noon. And that's when the market closed. And then I could go to work and actually had an income. So, I mean, I was extremely lucky in when I first started trading. And I owe a lot of my success to where I lived because I was able to pay my bills based on my job, because I sure as hell didn't pay my bills through trading when I first started. Nobody does. So, but yeah. Anyway, Daryl, I have one U.S. stock open short, FL low flow. Again, the trend will stay a trend till it's no longer a trend, a trend in that direction. So that still looks pretty short. The trend is down. Where's my little? Oh, there it is. Move that up. There we go. We've got a little bullish engulf yesterday. Is that going to stop it? It could be, but we don't know. And the trend is still leading. Thank you very much, Daryl. Let's see. SEDG. Look at that. So, it's stocks like this. Hydro, you do this to me all the time. Man, put some comments in there if you would. I know you wrote long, but don't we want to see follow through? Don't we want to see follow through? A hammer does not mean buy. It just means that the seller stops selling it right here. So, I think we want to see some follow through. Also, too, this is important. This is very, 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 very important. When we have a big move down, and it could be a gap down, it could be a move down like this right here, just one candle after another. Buying one single candle or two single candles, I think that's a short-lived endeavor. I think that is one of the killers. Let me stop for a second. I've heard that 95% of all traders fail. And do you know that 95% of all traders will blame it on everybody and their brother except themselves? It happens 100% of the time. It's always somebody else's fault. Couldn't be yours. Now that I've said that, let's come back here. When you have a drastic move down, stocks just don't do that. It just does not happen. So what do we need to see? Be patient. We need to see a low. We need to see a high. We need to see a higher low or a double bottom. And then we need to see a higher high. Once we break out of that higher high, that becomes the tradable line. In other words, that's our bottom line right there. Okay. So for instance, today we've got a high here so far pre-market. I don't have the foggiest clue if that's going to be the high today. We could come up. This could actually be the high. Still not a buy, because the likelihood of a pullback is about 99.99%. And here's what happens to traders. So they come in here and they think they just stuck a fat pig right in the butt and they're going to make all kinds of money. So they buy it. And what does it do? It pulls back. You know why? Because 36 years of trading tells me this is going to happen without question. Now, I can't say what that high is, but I can tell you it's going to pull back. It could be 2 or 3 days up, then pull back. But what happens is a trader buys this, it pulls back, they freak out, and what do? They lose. I'm just going to put $500 up here, okay? They lose $500 because they close it out, only for this thing to turn around and put in that, that higher low, and then it starts moving up, and then it breaks out of that high, and now they look at the chart 2 or 3 days later, and this is what the chart might look like. Now it works. So You've got to create a bottom. This is so important, especially for new folks starting out, because you will chop your account up, you will spend your money, you will lose all your money, losing on the pullbacks only because it never should have been bought so early. All right. Anyway, sorry to go so long in that, but that is one of the so important. So important. All right. It's probably time for me to get going here. Hey, I want to thank everybody. Remember, today is member e-learning. So for those that have a trial, by the way, you are considered a member, so you are invited to the e-learning. If you don't have a trial to hit run candlestick right way options or BYOB, well, we'd love you to take one. Okay. All right. You guys take care. Members, we'll see you at the bottom of the hour when this market opens up. Okay. Thank you so much, everybody, for listening in.